President Trump initially proposed to lower income taxes and reduce the number of tax brackets from 7 to 3, 12%, 25%, and 35%. However, that didn't happen. The Tax Cuts and Jobs Act, TCJA, still provides for 7 brackets, but they've been reduced somewhat: 10%, 12%, 22%, 24%, 32%, 35%, and 37%. The Tax Cuts and Jobs Act, TCJA, was the biggest tax reform since 1986, but data suggest that not all Americans benefited as much as the Trump administration promised. According to an analysis of IRS data, on average all income brackets benefited substantially from the Republicans' tax reform law, with the biggest beneficiaries being working and middle-income filers, not the top 1%. However, when PolitiFact evaluated the bill just before Trump signed it, they found that every income group would pay less in taxes in 2019, but that the benefits would flow disproportionately to wealthier taxpayers. President Trump signed the Tax Cuts and Jobs Act, TCJA, into law on December 22, 2017, bringing sweeping changes to the tax code. The law created a single corporate tax rate of 21% and lowered income tax rates, especially for higher income Americans. Many of the tax benefits set up to help individuals and families will expire in 2025. Most analysts expected the Tax Cuts and Jobs Act to boost economic output modestly in both the short and the longer run. So far, the evidence supports the prediction for the short run. It is too soon to tell about the longer run, but as yet there is little evidence of a strong effect on investment that could lead to higher longer run growth. The TCJA has likely influenced the economy primarily by raising demand for goods and services. Cuts to individual income taxes mean that most households have more after-tax income, which they are likely to spend. The TCJA has raised business investment and personal income above pre-TCJA forecasts. According to the Bureau of Economic Analysis, U.S. GDP increased 2.1% in 2022 after increasing 5.9% in 2021. Year-over-year inflation, the rate at which consumer prices increase, was 6.5% in December 2022. The Federal Reserve raised interest rates 7 times in 2022 and again on February 1, 2023, to curb inflation, increasing the target rate from near zero to 4.5 to 4.75%. When accounting for inflation, workers' average hourly earnings were down 1.7% in December 2022 compared to a year prior. The unemployment rate was 4.0% at the beginning of 2022 and ended the year at 3.5%. The North American Free Trade Agreement, NAFTA, was a trade deal between Canada, Mexico, and the United States that took effect in 1994. It led to increased trade, economic output, foreign investment, and better consumer prices. However, it was criticized in the United States for contributing to job losses and outsourcing. Domestic manufacturers relocated to lower-waged Mexico, which also suppressed wages in U.S. manufacturing plants. The net overall effect of NAFTA on the U.S. economy appears to have been relatively modest, primarily because trade with Canada and Mexico accounts for a small percentage of U.S. GDP too. However, there were worker and firm adjustment costs as the three countries adjusted to more open trade and investment among their economies. The Trans-Pacific Partnership, TPP, was a proposed trade agreement between 12 countries, including the United States, that was signed in 2016 but never ratified by the U.S. Congress. In January 2017, President Trump withdrew the United States from the agreement. As a result, the TPP never went into effect for the United States and therefore did not have an impact on the U.S. economy. The other 11 countries involved in the TPP negotiations moved forward without the United States and signed a revised version of the agreement, known as the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, in March 2018.